What if you could eliminate the guesswork in choosing short-term rental properties and rely on proven, data-driven systems instead?
This is the best investment because of appreciation, cash flow, and principal paydown, and tax savings. If I had to get started today, I would learn everything about raising money to be able to do joint venture deals.
Today, we're diving into the world of Airbnb investing with someone who's cracked the code. If you ever wanted to learn how to find properties with the highest probability of success, this episode is for you. This is Ryan Atkinson, and you're listening to the Outfit Podcast, where we uncover the secrets of building and running successful businesses. I am so excited for today's guest because joining us is John Bianchi, famously known as the Airbnb Data Guy. With a background in financial advising and data analytics, John has helped investors find over 200 profitable properties valued at more than $90 million, all generating cash flow with a 100% success rate. This is going to be so good. As the founder of STR Search, John is here to share his data-driven approach to finding and evaluating short-term rental properties. John, welcome to the show. So excited to have you on here.
Thanks, man. I appreciate you having me on here. What a great intro. I appreciate that.
You're going to nail this whole episode. And I know this is going to be an episode people are going to love because people just love real estate when it comes to like entrepreneurship. First off, can you share how you got started with your Airbnb rental business and what were you doing before? Kind of draw us that picture.
I started a financial advising business when I was 21. You got to build that up client by client, right? And by the time I was 24, I had partnered with a senior associate. He was managing 90 million. I was managing 10 million. I had 200 plus clients. I had my own assistant. I had my name on the door and I was 24, right?
Wow.
Absolutely hated it. Like it was the most boring thing you could ever do. I love the people I was working with, but I was just looking at it and I'm like, man, if I do this for the next 10 years, I'll be set. And if I also do it, I want to kill myself, like not to like, you know what I mean? Be too extreme. So it was kind of one of those scenarios where I felt really lucky that I had gotten to that stage at such a young age, because a lot of people actually, it takes about 10 years if you build it without partnering with somebody. And once you've been doing something for 10 years, it's really hard to like restart, right? So I got lucky is what I'll say by being able to get to that point at that age. And I was like, all right, I got to change. I got to do something different. I got to go figure out a way that I can actually build a business that I think is going to be sort of like infinitely scalable in some sort of way, whatever it is. And Airbnb was something that, you know, came by in some sort of way. I had an extra spare room and I was like, I'm just going to toss it onto Airbnb. And I was 24. I didn't care, right? I think it was even 23. And I was like, all right, I'll rent it out, and started doing that. I started to make enough money to be able to offset my rent. And I was like, cool. What else can you do with this, right? And I started looking it up, reading blogs, and realizing that there were a ton of people who were actually building businesses around this. That's how I really got into it, was trying to escape what I was doing before and using that as an alternative.
So you're at a young age doing Airbnb properties. I got to ask, like, how did that background as a data analyst like shape your approach to short-term rental from the start?
So just to like share this right off the bat, because, you know, some people think that data analytics is like this big daunting thing and it kind of scares them, right? Like they're like, what does that even mean? I did not go to school to be a data analyst whatsoever, right? I also didn't go to school to be a financial advisor. Like I didn't do any of those things. I just simply tried to like look at what was available and try to make sense of what I was looking at. And I think a lot of people overcomplicate it. And if you just sort of simplify it, you can kind of see the answers, right? So even with like the finance side of things, we barely like studied. It was the simple kind of finance. Like it was you're investing in a mutual fund. Really what we did was we were trying to figure out, when you invest into a mutual fund, there's a guy who runs the mutual fund, or lady who runs mutual fund, right? And they keep track of like who's performing best year over year. So all we did was we're like, well, who's the top 10 people? We're like, okay, we'll just buy their stuff. And that was it. That's literally like how advanced our research was. And it worked like a charm. Anyways, I say that to be like, hey guys, I'm not some super analytical nerd, right?
Yeah.
I may be a nerd, but it's super analytical. Anyways, then I realized that there was this platform, AirDNA, and AirDNA kept track of everybody's Airbnb and was able to somewhat predict how much every single Airbnb was making across the entire world.
Wow.
Yeah, blew my mind, right? And the reason it would blew my mind was because it was just like right there. Like all you had to do was like take a look at it. And if you reviewed every single 4-bedroom in that area, you could have an understanding of how much a 4-bedroom would make. And then you could understand like what you had to do to that property to be a top performer compared to an underperformer. So it's pretty straightforward, right? Now, one thing that you asked, like the financial advising side of things, how did that play into the Airbnb side of things? One thing I did realize was I had no money. That was pretty easy to realize. And then I was like, I need to raise money if I want to go and actually be able to open up these Airbnbs. And so being in like the finance world definitely helped a little bit there, because I maybe just had a little bit more confidence. Like I knew that was a possibility, but I then used the data to forecast revenue on properties to be like, hey, this is how much they would make. And then when you underwrite it, you go, hey, it makes $100,000. We have $70,000 of expenses. We'll walk away with $30,000 per property. And it's like, well, how many of these could we get and how much does it cost to open up the property? And so you do that quick analysis, right? And then you go find some people who are investors and you're like, this is what I'm proposing to do. This is what I've learned. Like, this is the game plan. And some guys invested with me and we went out and did it. So it helped a little bit.
I want to ask, what was it like raising money for this? Because you didn't have a real estate background. Did you have any parents that were real estate investors or anything? Or you're really learning this on the fly, which I love that entrepreneurial spirit, of course.
My dad worked in factory for 30 years. My mom babysat, and I didn't have that background. And even the way that I was trying to do the real estate as well, just to really clarify this, because I think it's important. I wasn't looking to buy the properties. I was looking to actually rent them and then turn them into Airbnbs, which is kind of a frowned upon way of doing Airbnb for a lot of people. I get it. I was young. I was trying to just figure it out. And nowadays I help with finding it and whatever, but it worked at the time, right? That's what I was looking to do, which is a lot easier because you're just simply renting it. There's not a huge overhaul of getting a mortgage and all those things. Now, looking back at it, I should have just learned about how to actually buy the real estate in the first place. But, in hindsight's 2020. But I don't know, I just did it. I found one that I could rent and I did it and I got experience from that. And then that allowed me to have more confidence to know this was working. And then data allowed me to have more confidence. And then the actual process of raising money was just asking people if they knew anybody. I was like, do you guys know anybody who's interested in this? And then I would explain what I was trying to do and came across somebody that I knew, and him and his brothers owned a whole bunch of Subways and they had some extra cash and they wanted to take that risk with me. So they were good partners. Yeah.
It's so good. Yeah. And obviously, your approach has changed a lot. But I wanted to talk about those first few properties because I know you're analyzing this could do well, this could do well. What were some common characteristics amongst properties that did do well? Talk to us about locations, proximity to lakes. So would love to hear that.
When I was first getting started, man, I had no idea what I was doing. Yeah. I look back at it and I'm like, I would never in a million years make those decisions. The first handful were learning experiences, wasting money to try and figure it out, right? Which sucks looking back at it. But just to be clear, I've kind of almost dedicated what I do on a day-to-day basis to stop people from making the same mistakes I made. So yeah, the first one was I was opening it up in Detroit and I tried my best to make sense of the data, and I did it in the exact opposite way of what I tell everyone not to do, which is just look at Airbnbs rather than really understand it. Tried to find something cool. And guess what's overpriced? Cool every time. So cool is always overpriced. So the first place that we found was overpriced, but we still went for it and opened it up. And then we rented furniture, which was way overpriced, and all these different things. So made a ton of mistakes. And then on top of all of that, we kind of got the approval to get the apartment before actually pitching them to do Airbnb. And then the guy that I was doing it with at the time, I was like, should we tell him? And we both were like, oh, let's just try and get away with it, which was the dumbest thing in the entire world. And within 1 month, we got an eviction notice. And so then we turned it into a corporate rental. So it's still made a tiny bit, but not nearly as much as what we were hoping for. What I'm trying to say is I made every single mistake under the book. When it came to that very first one, I was like, okay, don't get cool. Tell the person what you're doing. Do more data research. And so I did all of that onto my next one. And the next one, even that one wasn't that great, but it would have maybe broke even, I guess you could say, over the time period. But those two actually was what allowed me to have enough knowledge and skill and experience to raise the money that I raised to be able to go and get the other ones.
So we talked about those first two, and now you've found over 200 profitable properties. I mean, I want to get actual for people that are listening and are okay, this is a good idea. When you're now evaluating properties, what are you looking at? From all the mistakes what you know now, what are you looking at and advising people to do?
The very first thing you're doing is you're trying to find a market that has cash flow potential. So that's easy, right? You need cash flow in an Airbnb because it's a business, and every business you want to make money. Now, some people are okay with breaking even because there's also tax advantages. So some people can save $100,000 in taxes and they don't care if it breaks even for obvious reasons. It'll appreciate still. So they're still making money in one way or another. But for the most part, for my clients, I'm always looking to find that cash flow. So that's the first thing I'm looking for. But before you can even dive into the data on a market, you got to figure out the regulations, because regulations are real tough with Airbnbs, and I can speak on that as well. And so you got to make sure you're in a place that has favorable regulations. Then what you want to do is you want to see if you can find cash flow. And so with the data, what you can do is you can generally figure out how much properties will make. So this is called forecasting the revenue. And so you'll look into, let's take Scottsdale. You'll go and take a look at Scottsdale, and you look right into the downtown of Scottsdale. And then you'll look at the 4 bedrooms, and you'll try to understand how much they're going to generate in revenue, forecast the revenue. You'll get an understanding of what the other homes that currently exist are doing. Let's say that's $120,000, right? At that point, you then need to go look for the homes that are for sale on Zillow and figure out how much they're selling for. Okay. So there's a simple rule with this, which is the 20% rule. So if the property is making $120,000, then you want to buy it for $600,000. So the revenue is 20% of the purchase price. Okay. It's not the cash on cash rule. It is the price to rent ratio. And so if you can see then on Zillow that there's homes for sale for 600,000 that match the homes that are making 120, like they look very similar, right? And they have the same size backyard, same size interior, all that kind of stuff. Then at that point, you're like, okay, that home will cash flow, right? You don't have to do any other additional underwriting. It'll cash flow if that's the case. And so that's how it starts. That's like the beginning process. And then from there, you got to like peel back the onion and every single layer and understand everything. Yeah.
How are you finding like what you think an Airbnb could make? Are you still using like that same platform? I'd love to hear that specifically. And what was it?
It's called AirDNA.co.
Perfect. I just want to make that clear for everyone here of like where you're getting this from. This isn't private information where you have to buy something. So those three that you just laid out, find cash flow potential, regulations, and forecast the revenue. I think find cash flow potential is an obvious one, but let's talk about it here. Are you looking at specific locations? Are there locations that work better considering regulations as well? Talk just about that.
Yeah. So the 20% rule that I just referred to is how you find the cash flow. So that's the way where you're like, okay, this market has potential to cash flow, right? So I've studied 350 markets and I advise my clients into 15, right? 350 down to 15. There's only a handful of markets that actually work with the regulations being good and there's actually being cash flow. And so that 20% rule is an indicator, hey, there's cash flow here, right? And then you really got to like dive deep into that market and build a proper buy box to understand what are the revenue drivers to be able to maximize your cash flow potential. You're essentially trying to figure out like, what is the cheapest home that I can possibly buy in this market to drive the most amount of revenue out of? And if you can find that sweet spot, like that's the property that you want to purchase.
I want to ask the regulations though, which states are not friendly to this? Because I know there can be some states that aren't friendly to this. What are some states that are friendly though?
I mean, like if you want to go very broad, blue states are going to be not friendly, red states are going to be friendly almost always, right? That's just the world. But Arizona's pretty good. California's not. Florida's pretty good. New York's not. Sort of. Actually, New York is actually not that bad, to be honest. There are some spots. New York is big. So, but you got to go like north New York, right? Anyways, that's generally how it goes. If you want to talk about regulations for a second, right, to like help people understand this concept here, generally what you want to do is find a market where they already have regulations in place because you don't want them to show up with new regulations because that's really going to screw you over. However, before you even do that, the reason a place gets regulated in the first place is because Airbnbs are kind of hurting that location. So New York and San Francisco are two great examples of this. They're both landlocked by water. And so there's only so many spots for homes. And so it makes it really difficult to add in Airbnb because it hurts that housing market even more. And they don't need Airbnbs. It doesn't help the city all that much revenue wise, right? And so whereas if you flip that and you think of like the Great Smoky Mountains, right? There's Gatlinburg and Pigeon Forge and these areas are just all Airbnbs. And if they all go away, the whole economy in that area is gone. It's like, okay, let's start with that basis. Forget about regulations. Just think about that. You're like, okay, well, where do Airbnbs fit? Right? Where do they actually work? Where are people okay with them? Things like that. Start looking in those areas, then check out the regulations for those areas, and then make sure that the people who live there are generally okay with Airbnbs. Like as an example, in Palm Springs, the residents of Palm Springs have just been trying to get rid of Airbnbs forever. They just keep like pushing. And it's in California, right? Where like they can keep pushing. So eventually they're just going to keep getting pushed right out. Whereas you go to Gatlinburg, that's never going to happen. I'm not saying invest in Gatlinburg, but I'm just using that as an example.
I think that is really, really good. Good talking about the regulations and then also forecasting the revenue. That was the third piece in there. Software you use and equation you use, because obviously forecasting revenue is what gets people excited here.
Yeah. So AirDNA is the software that I'm using for that because it has all the data and they are trying to predict what the annual revenue is going to be.
Wow.
Yeah. So what AirDNA does is they go into the calendar of every single Airbnb every single day and they record the calendar, right? And they can see, so like, let's say they look at all of next month and they see all of next month is available for $100 a night. They record that. Then they come back the next day and they realize that one of those days is blocked off. They go, well, that was probably a booking, right? And they go, okay, well, that host made $100. And so then therefore I'll record that this place made $100. And they repeat that over and over and over and over again. And eventually you get the full annual revenue, right?
Oh, man.
Yeah, my mind blew when I saw that. Jaw dropped, eyes open. I remember like showing my dad and my brother-in-law and them not caring whatsoever. And now like, 8 years later, this is all I do. So yeah.
Would love to hear a little bit more, like, what is the potential, earning potential here as we continue down this revenue talk track? Like, what could someone make? Obviously, it depends on factors of like how much can you raise, all that stuff. But what is potential for year one?
Yeah. So with the Airbnbs that I'm able to find, we're averaging between 20,000 and 50,000 in free cash flow, right? So the properties kind of vary. Like they'll make anywhere from like 100 to $200,000 in revenue, but the cash flow at the end of the day is going to be somewhere between 20 and 50 on average. We have some clients that are up into the 75. We have one client. This guy's awesome. And this guy was trying to find a property for 2 years, right? He's kind of like, he watches all my stuff and like consumes all of it. He's a super nice guy. Like we're on a texting basis now and everything. We get him a property in a market that I was like super nervous about. So I did it like more due diligence than normal. He's had it open since November. And by the end of February, he will have profited $35,000,
Wow.
which is what a lot of the other places will end up making throughout the whole year. He's going to like nail that in 3 months. It's just mind boggling. And like March is probably going to be better than February. So it's wild. The guy deserves it. He puts so much work in. He's such a nice guy. So
That is so awesome.
super cool story.
What is so cool about this is like a lifestyle change. I mean, profiting $35,000 in 3 months here is like something that can change your life. And I know a lot of entrepreneurs listening here are going to be like very perked up to like hear, especially something like that as well.
Yeah. And I mean, like that is just one part of it, obviously. And the other part is he's going to have tax savings on that too, because there's this thing called the STR tax loophole, which allows you to be able to save on your active income, which is like super rare to be able to do. And then obviously it's going to appreciate as the years he's able to hold on to it. Now, I kind of feel like I need to mention these things just because a lot of business owners will probably listen to this. There's this one saying that stuck with me a lot, which is that you make your money in business and you invest it in real estate, right? That's kind of how I think about things a lot too. Like I have my own business as well, and I'll invest my money directly into real estate. It's just that Airbnb is a business. It's more work, right? But it's not like the business that you run or the business that I run, right? It's a significantly easier business. I was trying to explain this earlier today because take like a software like AirDNA as an example, right? You can't easily just replicate what AirDNA is doing because you also don't understand their marketing side of things, right? How they're like upselling people, what they're doing internally, how they're like using their, their UI to make it beautiful and everything. Those things are secrets, right? They're behind the scenes. They're doing certain things. Something works, something doesn't, right? And that's what most businesses are like. However, with an Airbnb, the home is just on Airbnb, and that's the marketing channel. So there's nothing to figure out. If you also put your home on Airbnb, that's it. So then therefore, when you're trying to compete against these people, all you have to do is look at what they have inside their home and do the same thing and then a little more, and now you're better. It's just stupid easy when it comes to beating your competition if you just do a little research prior to getting it set up.
Oh man, well, you have made it like seem stupid easy, like throughout this because your clients prospects boast 100% like success rate, as we said in like the opener. I mean, like, how are you defining success like within like this context?
Profitable, you're cash flowing. As long as you can hold property long term, you're gonna appreciate, right? And so I think I mentioned this already, but like I hyper focus on cash flow. I call cash flow a cushion. Like cash flow is great. Don't get me wrong, it's great, but you're not gonna get wealthy off of cash flow. And so you got to think about cash flow as like this defense mechanism rather than a net worth appreciator, because the property appreciating over the years is really what's going to do it, right? So then therefore the idea is you got to hold that property for a really long time. But the only way to do that is to be able to keep covering your expenses, right? Now, today, things are easy, right? The economy is doing fairly well. What happens when it doesn't? That's the scenario that I'm always thinking about. It keeps me up at night. I think about it all the time. What happens when the economy crashes? What happens to these 200 plus Airbnbs when everybody stops traveling, right? We've had a strategy since day one, which is like try to get your Airbnb to be in the top 10 percentile of that market so that when the market does crash, your home can still get booked because there will still be some people traveling, just less. You can lower your price. You're still significantly better than everybody else. You still get bookings. You at least cover your bills and you're good to go, right? So the cash flow, the further you are from break even, that's your cushion. It allows you to be able to go down $40,000 in revenue and still break even so that you can get through the recession and get to the boom that's coming. But more importantly, hold the property over a long period of time.
I love it. I want to ask, like, how do you get into the top 10% of like Airbnbs? I think that all 100% like makes sense here, but like, if you had advice on like, how do you actually get in the top 10% of Airbnbs? Would love to hear that advice.
Again, stupid simple. Look at every single last Airbnb that's in the top 10 percentile, write down every single thing that they have, and then do that. That's it.
Are you talking like amenities or like what do you mean specifically for that?
What does the home look like? Let's say we go into a market where there's no water feature, no view, and you're just competing home to home, right? Maybe you realize that all of the properties in the top 10 percentile have a pool. You go, okay, need a pool. Then you also realize that most of them have a putting green. You go, okay, need a putting green. And they actually have a pretty decent sized backyard too, where they've added a bunch of additional like lawn games, right? You got your like ball ladder and things like kids. Okay, we're gonna add that. They also have a fire pit. And you go, okay, I'm gonna add that. And then what you do is you make this entire list of what they all generally have, right? And if, maybe one doesn't have it or the next one doesn't have it, but if the majority have it, you should have it, right? And so that's the first step. Now, you also want to look at the home itself of all the top performers. Are they all like 5 bedrooms? Do they all sleep 16 people? Are they mansions? Because if so, that's going to be pretty tough because the mansions are going to be so expensive that's going to be impossible to cash flow. Or are they just like homes that you can actually afford, right? Is that what they look like? Okay, they look like homes I can afford. They have a pool, putting green, fire pit. And I go, okay, cool. So I'm going to find that home that's similar to it because there'll be a lot more, right? I'm going to make sure it has a pool. I'm going to make sure it has a yard that can fit those 3 things. However, I'm also going to make sure the yard is big enough to add a pickleball court. And now I'm going to have something that nobody else has. And when a guest is going to look for an Airbnb, they'll go, well, why would we not take this one that has a pickleball court for the exact same price as the one that doesn't have a pickleball court? That's it. Like, that's it.
What I'm kind of like comprehending here is like there's a lot of competitive research that is like being done for this. You're identifying like AirDNA and then like you're also doing this, like identifying that. Would you say like competitor research is kind of like a key ingredient, like making this actually successful?
It's actually probably 90% of what I do is just competitive research, right? But the thing is that it's so much easier than most businesses. That's what I'm trying to get across is that there's no secrets. There's no like secret recipe that these Airbnbs are doing that you can't find in the photos.
Yeah.
Whereas like maybe a construction company, it's impossible to understand like what are they actually bidding? Like how did they get these clients? You know what I mean? That's what I'm trying to get across.
That 100% makes sense. What I also want to ask here too is like you're talking about pools, pickleballs, you're doing your competitive research. That actually takes some money here. You're not starting this with $0. I'd love to hear like how much money would you advise someone, varies of course, how much money would you advise someone to have to start a company like this?
There's a couple things I want to mention here because this is a business-based podcast, right? And a lot of what I'm talking about is investing into real estate, which is more of like an investing thing. However, there's without a doubt a way to be able to build a business around this without having any capital at all. Like you could do it for $0 and eventually get to a lot of what I'm talking about. What I'm talking about is investing into a property that can cash flow for you. The minimum investment that I recommend is $150,000, right? To be able to just get one of these properties that can maybe make you the $30,000 that I've been referring to, right? If you're a business owner and you're kind of hearing that, like I remember myself when I was 20 and I didn't have $150,000 whatsoever, right? If I had $150,000, I don't think I would be trying to turn it into $30,000 in cash flow. It's like, that's not going to do it for me either. So it's not super exciting, but like as an investment, it could work. But if you're trying to look at this as a business and you're trying to think like, how could I do this and turn this into a business? This is the game plan. So I'm going to lay it out for anybody listening, right? Now, there's just like within real estate, you can be a property manager for apartment buildings, right? Or single family homes and rent them out long-term. You can be a property manager for short-term rentals. However, you just make more money doing it because there's more money being generated and you have to do more work in comparison to a long-term rental. So most property managers make 20% of the revenue. If the home makes $100,000, you're walking away with close to $20,000 of that, right? The thing is that you don't have to buy the home. You don't have to put in the pickleball court. You don't have to design it and you don't have to do anything. All you have to do is get that person to let you manage the property. And there are, as an example, one company called Big Casa has like 35,000 Airbnbs that they manage. So no one can complain and say that nobody's going to let you do it. There's 2 million Airbnbs in America. People will let you do it, right? They need it. A lot of people need it. So property management contracts are free, right? The struggle is how do you get somebody to let you manage your property without you having any experience? And so what you want to do is you want to try and get experience. Now, if somehow you can get to work for a property management company, that would be a great way to get that experience. If you could, find somebody who has an Airbnb that would let you manage it for free or teach you the ropes, that would be a huge advantage. Go to a networking event in real estate and offer your services for free to learn. Those are options, right? However, if you want to kind of skip all that and you want to try and get some experience without it, rent out your spare bedroom. If you don't want to live with a random person, don't do that.
Yeah.
And take $5,000, find a 1 bedroom in the city or market that you're in and convert it into an Airbnb. Now, make sure you do your data research prior to make sure that you know that is going to still work out for you. Don't go rent a $3,000 one bedroom and expect it to perform really well. Get something that will make sense, right? It has the features it needs. Maybe it's in an apartment building that has the amenities like pools and gyms, things like that, stuff like that. That's what I'm trying to get across. And that's going to be like your cheapest amount of dollars in to learn. And when you have that, you have the foundation to then go to the next person and say, I can manage your property. I know what I'm doing, right? And you go get that next contract. And all you have to do is be good at sales and operations. And you get the next contract and the next contract, throw it into the operations and keep building out your operations one after another, right? Keep doing this and you get 10 of these properties that are all making $100,000 a year and you're making 20%, you have a $200,000 a year revenue business. 10x that, you got $2 million a year revenue business, right? That's the reality of that. Now, if you then make your money in business, you now have the money to be able to go invest and get your own Airbnb, own 100% of it. You're doing the work yourself and you're obviously making that money as well. So that's the strategy there.
Yeah. I think that's like beautifully laid out of like exactly like how to get started with this. It just like seems like so much, especially like if you're not new to the real estate space, but you really can get started without investing in properties is like what it's sounding like here.
100%, without a doubt. I'm speaking to my 20-year-old self right now, saying like, you don't need to invest into the property at all. With that being said, if you want to grow your net worth, right? If that's really what you want to build up a really, really strong base of wealth, learn starting today how to raise money to buy properties. And if you just hyper focus it, like keep managing the properties, keep getting new contracts, but learn the art of raising money for a deal, and you'll be able to raise money forever for every deal. And you'll continue to be able to find good deals and find good partners. And then you get a portion of that property as you continue to go. And so now you're not just managing somebody else's property, you're managing your property that you own a percentage of. And then you can do that over and over and over and over again. And your net worth in 20 years from now will be like laughable. So that's the path. That's the path I'm taking.
And it's a great path, obviously, here. We talked a lot about like the pros here. I do just, of course, have to ask about the cons. Like, I want to ask, like, what are the cons of actually like the day-to-day business of this? I would love to hear about that. Like, lay that out for us, just so our listeners to be educated on this and know.
You're in the hospitality game. So if you are not hospitable, it's going to be tough because you have to suck up. You have to be nice. You've got to do what the person asks you to do. You've got to be on call 24/7. You've got to do all these things for people because they're paying to stay at your place and they expect an experience. They expect hospitality. That part is tough. That part's tough. Like for sure. I literally just read a review about a lady who like she gave a 2-star review because the bathroom broke, which is understandable. Like bathrooms, they can break, right? But her complaint was that she had to walk upstairs to go to the bathroom. And so she gave a 2-star review. It's like, you're going to have to deal with people like that all the time. Now, it's not everybody. And you can create systems that allow it to flow well. And if you get to a certain number of listings, then you can hire somebody to be able to do a lot of that work. When I hit listing like 7, I think it was, I actually started a cleaning company. The person who ran the cleaning company also ran my Airbnbs all together. She took them both over. And then I just sort of stepped back and tried to find more properties to raise, traveled a lot more. I gave her a full-time job that she really loved. And I got to do more things that I enjoyed. And then I didn't message a single guest for like a year.
Oh, that's so nice.
Yes, it was amazing because I'm not hospitable at all. Like, I'm not that person. It's really funny. Like my business now is helping people find properties that cash flow well. And it's hyper focused around data. And that's all we care about. And I'm good at it. Not in a cocky way. It's just like something I feel good that I actually get to do something
confident about. Yeah, that's okay.
Yeah. But a Airbnb business, the skills you really need for an Airbnb business is sales, operations. I don't have either of those. I'm like, you also want to be hospitable, and I'm not that either. So it's just like, it's something I still want to do, but I need somebody in between me and the property who can help with that.
I love it. I want to ask about the risk as well. Like, is this for risk adverse people? Do you need to be a little risky to like go into this space? I want to ask about that as well.
Like if you're going to put it on a scale, a long-term rental is going to be less risky compared to a short-term rental, without a doubt. The numbers that I'm talking about, right, are not super normal. Just to be really, really clear. I do this for a living. It's all I do. I think I've found more properties than anybody in the past 3 years, like anybody at all. And it's something that I've gotten really good at, right? But if I were to just be getting started and like just looking in and just trying to figure it out, I wouldn't expect to be able to find it so easily. I want you to. I've got a ton of free training to help people figure out how to do that. But it's not that easy, I guess is what I'm trying to say. So there is risk that you get a property that just can't hit the numbers that you need it to hit, and it's starting to lose money, and then you have to actually end up selling it, and then you sell it in like a down market or a recession hits and you can't cover your bills and you have to sell it in a down market and you put, $40,000 into the property or more. And that's like into furniture and that's depreciated as soon as it goes in and it's not worth anything. And so, yeah, there's more risk to it than a long-term rental without a doubt. If you're willing to take that risk, put in the research and work, you can get there.
Well, someone's like, okay, actually, I am ready to do this and I am hospitable. So let me get started here. Last question for our fan blitz. What steps should listeners take in the next 30 days to get started with an Airbnb investing?
This may sound biased, but if I'm wrong, tell me I'm wrong. Right? You need to think about it this way. Okay. And this will make sense as to what the advice I'm trying to give right now. If you have an Airbnb and let's say you got it, right? And then you screw up the guest stay completely. Like say you forgot to clean it from the last guest, they show up and it's not clean. And then you like rush somebody out there to get it cleaned. And then while they're there, the toilet breaks and they got to walk up the stairs, right? Like stuff like that happens. And it's all of a sudden, it's like such a terrible experience for that guest. That sucks, but it's super easy to fix. Right? By the time the next person shows up, you're going to make sure that place is super clean, the toilet's fixed, everything's good to go, and then you're going to try and do everything you can to avoid that happening again. Easy fix. What's not an easy fix is buying the wrong property in the wrong area for the wrong price, right? To do that, it takes about 2 years to realize that you did it if you don't know how to forecast the revenue properly. Because in year one, you're thinking like, we're just getting this thing started, we're just figuring it out, like, we're learning curves, we're ramping up. Then you get year two and you're like, okay, we didn't make any money, but what if we like reinvest into the property and make it even prettier and add more things? And then you go a full other year where that didn't do anything either and you're still losing money and you go, this is not working out. So it takes 2 years. So 2 years to fail. And then at that point, you got to sell the property and you probably gain some equity, which means you got to go through a 1031 exchange to be able to then find another property to invest in. You got 45-day window to do that. So screwing up on the property is significantly more complex than screwing up on how to manage a guest or how to host a guest. So the advice I want to give is I got a 7-day Airbnb Data Basics course that I created after helping buy 120 properties. 100% free. Learn the skill of data basics, what's good data, what's bad data, which is a huge piece. Figuring out how to find a market, figuring out how to find a property, build out a buy box, how to forecast the revenue, how to underwrite, know amenities you need, and actually get the property. 7-day challenge gets you right there. That's what I recommend to everybody. I try to build out a business where it's like, you can do it yourself, but if you want to hire me, you have the option.
It's so good. And like, if you fail on that first property, that could be a costly failure. So let's move to our fan blitz questions. And these are questions submitted from our community. Guys, you want to join in on world-class entrepreneurs, go to www.youtube.com/upflip and submit your questions there. But John, are you ready for our last 5 questions here?
I'll do it.
Perfect. Number 1, have you ever lost faith in yourself or your business?
My prior businesses, for sure. I would say I lost faith. This one, no. The one that I'm doing now, I absolutely love it. I feel like I'm perfectly suited for it. I would say I went through a lot of learning, a lot of learning, and I'm never, ever going to stop learning. I got a lot of books behind me that prove that. I've got a lot of audiobooks, gone down a lot of events. So yes, but you push through.
What was the first property you ever bought for the purpose of renting it out?
It was the Airbnb in Detroit. It was a little condo, 2-bedroom with spiral stairs right above the Nike store, which was the coolest thing ever.
That is cool.
But yeah, it failed miserably.
That's okay. How do you get guests to leave reviews on Airbnb?
You ask them. You just, at the very end, there's an automated message that goes out from your software that you use. And it says like, hey, hope you enjoyed your stay. Can you give a review? There's way more Airbnb gurus out there that talk about operations that teach you how to send out the right hospitable message. Not me. So
I love it. You're good at data and you're good at
Yeah.
you're going to hone that. Number 4, going back to that, what is your strategy for learning?
Oh, that's a great question. I read a book about learning. So there's a book, I can't remember the name of it. It's something about this like chess player. He's like one of those like really high-end chess players. I can't remember the name of the book right now. And it teaches you how to learn. So you can actually read a book about how to learn faster. But I would actually say the best thing that I did was reading the book Deep Work, which taught me how to sit down with 0 distractions and actually hyper focus on something. That is where 100% of my any sort of success that I've ever had has come from, is like by deep work.
What are the less obvious reasons you've achieved your success?
I went through a lot of like personal struggles with relationships when I was younger that caused me to not like sort of spiral, but try to understand life, I guess you could say, and like be able to work through day to day. And that led me on this path that is a never ending path of just trying to understand life and get a little bit better and do whatever I had to do it. And that has been a very, very, very long journey, but it's also led to who I am.
Well, John, thank you so much. I'm excited your journey has led us here today. This is an awesome step-by-step playbook on how to get started in the Airbnb space. So, John, thank you so much for being here. If someone's like, oh my gosh, I need to learn more about him, where can they connect with you?
strsearch.com. If you go there, you're going to get everything. You'll figure out how to connect with me. That's the best place to go, strsearch.com.
Everyone, that was an amazing episode with John. 3 quick takeaways. Number 1, cash flow is cushion. Super important to have that cash flow that gives you that cushion to be able to scale and grow. Number 2, this is a lot of competitor research. There are tools out there to allow you to see how much can I actually make? What are people doing? A lot of this just comes down to really solid competitor research. Number 3, if you are going to do this, make sure you are hospitable. Make sure you love dealing with people, working with people, being a face of what you're doing. You got to make sure you're hospitable in this business. If you've been enjoying this podcast, please don't forget to leave us a review. Your reviews and feedback allow us to bring more amazing podcast guests like John onto the show. Perfect. John, thank you so much for today.
Thanks, man.